Yeah, we're still teetering here. We got some strength, we got some weakness. Hey, everybody, Courtney Smith here with our weekly newsletter, TradeSmith. Great to have you here. Let's dive right in because, boy, this is a nerve-wracking market. And this is not nerve-wracking. This is very calming. In fact, it'll probably put you to sleep. Okay. Let's take a look here. I told you the market was going to sell off, and we've been selling off pretty much every day. And there's still a lot of weakness in this market. So I'm not looking for the bull market to really assert itself in the major indices. Let's break this down. First of all, you can see we peaked at the beginning of March. It's a month later, and we're at lower prices. So March was not good. You can see the purple predictor is still showing weakness. That's telling me that there's still some internals that are going to cause this market to sell off a little bit more. No big deal. Maybe a total of 4 or 5%. No big deal. Who cares? That'll actually give us the ability to get in, to build some value in the market, to get some cheaper bargains as well. So this type of a little mini correction, I don't care about. In fact, I like it. Let's take a look at the Dow Jones. I showed you the DI plus, DI minus. We just switched back to plus, but it's been going back and forth. I'm calling that neutral. The NASDAQ, though, look at this. New high close. I keep pounding on this. This is where the action is. We could be making, and we're making money in our individual stocks and for our fully paid up members. We're doing just fine. Thank you so very much, because we focused on stocks that are in bull markets, and here we can see it. One of the key factors is that there's the old saying, this is a market of stocks, not a stock market. There's lots of great stocks out there that you can make money on. Now, one thing I don't like about this chart is we went and made a new high close, but look at that green line. That's the RSI, and it shows the momentum in the market, and it did not make a new high, which tells me that the NASDAQ is not going to continue higher this week. Now, it's going to probably be a little bit weak as well. So the place where the strength has been is going to be a bit weak as well. So we're going to see all three big indexes heading a little bit lower this week. Now, seasonality, on the other hand, looked fantastic. I mean, I was crying the blues a week ago. There we were right at that breakdown level of 132. You can see we snuck below it by a snick, but we closed strongly, and we've been up ever since. I mean, look at that. There's 2, 4, 6, 8 days in a row up for the IWM, which is much stronger than any of the other indices. In addition, it broke that downtrend line by a smidge, and the purple predictor is skyrocketing. So what does that tell me? Small caps are still going to continue to do well. Large caps, including the NASDAQ, are going to suffer. Seasonality, nothing new here till May. Otherwise, it's pretty much bullish with the occasional little dip. Yield curve still releasing pressure, which is good, allowing the market to move stronger. But you can see coming up near the end of April, the yield curve starts to move down, and that's going to put downside pressure on the market again. Asset allocation, a little bit bullish. No, it's not really telling us much here. Our stock market RISKDICATOR took a big jump up, meaning that the market is looking to take more risk. And usually when the market wants to take more risk, that's actually bullish for the market. So I'm actually counting this as a bullish indicator. Global shares have outperformed the U.S. I mean, gosh, what can I say? Japanese shares underperforming but holding up nicely. This is still going to be a major bull market. One thing that concerns me, though, is the purple predictor has been leading the market lower now for quite some time. Bonds, whoa, look at this. We're in a gigantic trading range, and we've been there for the whole year. And, look, from a fundamental perspective, I think that we should see bonds in a bear market. Inflation is going up. The economy is generally getting stronger. The Fed is going to start reducing their balance sheet, which means there'll be a smaller supply of bonds. There's just every reason to believe bonds should be going lower. Except there's one reason why it shouldn't go lower, which I'll show you in a second. Well, it was the asset allocation, so I already showed that to you. So Let's take a look at our risk indicators. 2 out of 3 suggest higher interest rates. So going back to this chart, it looks to me like we're going to head to the bottom of the range now, down to 116, 117, something like that on TLT. Not a gigantic trend, but another move to the downside. All right, let's go and take a look then. Bonds, if they're going up, that would be, and the Fed's raising interest rates, then that would suggest the dollar will go up. And indeed, the dollar did go up. But it's in the context still of a pretty bearish move. So I can't get long, even though I'm wildly bullish fundamentally. Stronger economy, higher interest rates, tightest monetary policy. I can't find a reason to be short the dollar, but you know, I like to have the fundamentals and technicals agree, and we're in a situation where the fundamentals are bullish, but generally the technicals are bearish. And in that kind of a situation, the best strategy is always to stand aside, which is what I'm doing. But if the dollar is strong, then gold would be weak, and it is. In fact, gold couldn't surmount the highs we made at the end of February. That's not a good sign. We've got to break those highs to keep this week, to keep this bull market intact. Otherwise, it's going to look like a failure top. Gold indicators are a little bit bullish, so they should break that high. Oil, a little bit of a snapback here, going back up. We'll probably get up to above 51.50 and then start heading lower again. Hey, freebies, love having you here. But of course, if you were one of the cool kids, you'd already have subscribed. So I hope you do. Anyway, freebies, I'll see you next week. Fully paid up members, hang in there for a second.